Market President, Bank of America, and Market Executive for Global Commercial Banking, Bank of America, Merrill Lynch.
Good morning. Applause for a banker, that's rare. I appreciate that. Thank you. So we're at a conference about growth, and I think one of the things that's a rational question to ask is why are we talking about risk, and why are we talking about risk management? And I'm really thinking a lot about what Jeff Fettig said, as they were working through the process of trying to get cycle time from idea to shipping down from 15 or 50 years down to 22 months, you've got to move really fast. And the faster you move, usually the riskier your situation can be. So I have the clicker, which is so rare that I don't get this at home. I'm going to try to move these slides forward here. Great. So let me start with an overview of risk management. First and foremost, let's define risk. I spent a little bit of time looking at Wikipedia over the weekend to try to get a definition of what that should be. And I really like the one that they came up with, which was an intentional interaction with uncertainty. Because you have to be intentional about your risk taking, but you also know fundamentally that the world's an uncertain place. And when we think about what risk means for business people, it's usually about the risk or the possibility of a loss. Historically, we always thought about those losses in financial terms. I have a chance to lose a certain amount of money. But increasingly, more and more people think about risk in terms of the loss of time, the loss of information, or the loss of reputation. All those things can have an impact on how you're going to execute your business. Risk management, though, can be an enabler of growth, and it's actually very important as we think about how fast the world is moving. To get ready for today, I did a review of some information that some of our BLM partners in the professional services world sent me. I came across a survey that PwC pulled together about a year ago. They surveyed 1,500 executives, and they said, is your business getting riskier or not? 75% of them said, yeah, it's getting riskier, and it's getting riskier because of two main things. One was the fact that the world is moving at an increasingly rapid rate, and then secondarily, that speed of change or rate of change forces our company to make changes internally at a faster rate than ever. Those two things in combination have caused an awful lot of riskiness in the companies. And so if you're thinking about how risk management helps you grow, number one, what it helps you do is eliminate derailing losses. So that loss of time or distraction or money. Sometimes people call it stepping on a rake. And you also ensure the scalability and flexibility of your business as you move forward, because if you're really going to be built for speed, you've got to have a process that's reliable and repeatable. And at the end, I think you have to think about risk management as being a lot more than just compliance. It's not just a senior management imperative. It doesn't just sit at the top of the house. Ultimately, if you're going to have a culture that is resilient and can grow quickly and efficiently, then it's got to be, risk management has to be embedded in that culture. All right, so let's talk about a framework. Most companies, when they start to manage a risk, they start off with a framework. And every framework is going to be different. It's going to fit to fit the circumstances of that particular company. So things like industry, geography, your regulatory environment, public visibility, all those things really drive what you're going to sort of frame up as your risk framework. And ultimately, you're going to look at or categorize a combination of strategic, financial, external, or operational risks. The ones that right now are getting a lot of attention based on the research that I've done are things like compliance risk, because everybody has to deal with compliance to a certain degree, but it's rising really at all levels. Information risk, information security is obviously a big one, as well as reputation risk. And then ultimately, not all risks end up being treated the same way. Some risks are not preventable. You have to take a certain amount of risk in order to succeed. That's the way the world works. There are some other risks that you know are going to be out there. Think of like the weather. You just don't know when. You don't know when it's going to snow and cause your commute to be long, like my friend Annette Gordon's was today. Or on the other hand, there are some risks that can be mitigated, and you just need to do so in the most cost-effective and simplest way. So I'm going to frame up a little bit about the risk management process for you here, and start off by taking some of these risks and putting them into three big buckets, maybe give you a few examples, and then also talk about how strategically some of those risks are managed. Let's start off with strategic risk. I'm thinking of back to Jeff Fettig's comments about Whirlpool and how when they decided to go global, there were 3 people who had passports in the company. So if you're going to make this big decision to all of a sudden become an international company, you're taking on a fair amount of strategic risk there if you've never been out of the country. Similarly, a lot of companies nowadays coming out of the crisis are using M&A as a strategy to grow. But M&A, if you haven't done it before, is a skill that you have to develop, and it can create risk for your company if you don't know how to manage it well. Regulation obviously is a strategic risk in the sense that if you make a big decision based on the regulatory environment and it suddenly shifts around you, that can be a difficult situation to work through. And then obviously reputation. If something has happened to you or your company that causes you difficulty in executing your strategy because of reputation, that's a tough one to manage through. So how do you manage through all these risks? Well, ultimately, you have to balance risk and reward. These are the kinds of things that you have to take some risk in order to succeed, but what you want to do is skew the playing field as much as you can into your favor. There's another set of risks that are sort of similar to strategic, and those are, I would call external risks. Think of this as the economic weather. So for example, you've got industry crises. They happen from time to time. You don't know exactly what they're going to look like. You don't know when they're exactly going to happen, but they always happen. Similarly, you've got situations like geopolitical events. There's always volatility out there. You never know exactly how that's going to manifest itself, but you have to plan for it. So what's the management strategy for that? Well, it's basically advanced planning and exposure minimization. I like to think of it sometimes in a company that I used to work in, we used to have a plan that said, in case of financial crisis, break glass, pull out plan, execute, right? So a lot of companies will do game theory and gaming out those sorts of things. This last bucket of risk, called preventable, are really the kinds of risks that actually most companies and people spend the most time on. And it's led by operational risk. You know, the easiest way to define operational risk is a situation where your operations fail, your process fails, your people or your systems fail to deliver the expected outcome. You basically make mistakes. You know, you expect to produce a widget that's going to look and act a certain way, and it doesn't. And if you do that, I don't know, 1,000,000 times, to ship 1,000,000 of those things, you're going to have a problem down the line. That's an example of an operational risk. Another one is financial risk or market risk. That's really based on changes in asset prices. And by and large, those are fairly easily hedgeable, but they're, in a world of increasing volatility, more important probably than ever to take a look at hedging. IT security is obviously a big risk that's in your control, to at least to a certain degree. I'm not a cybersecurity expert and not going to talk about that in any detail, but I can tell you that it's a hot topic for every company out there these days, as is compliance, this last risk. You know, compliance is sort of no fun. This is the Dr. No part of business life. But on the other hand, if you don't comply with rules, not only letter but also spirit, ultimately that comes back to bite you. So what is the management strategy for all those kinds of preventable risks? Well, what you basically want to do is you want to transfer, eliminate, or in some way, shape, or form, avoid those risks if you can. And you want to do so in the most cost-effective way. Now, one of the things that's important to do that is to devise a process or devise a process that wraps around that framework. And by and large, most companies and most entities will use a process that starts off with risk identification like we just talked about. They'll come up with a statement of saying, okay, this is how much and the types of risk we're going to take. In some companies, and say in the financial services industry, you can quantify a lot of that stuff. In some cases, you can't. And so that you have to decide, okay, these are the kinds of customers we're going to service. This is the way we're going to service them. These are the processes that we're going to use to do it. Those are all definitions of risk management. And then ultimately, you've got to design a control environment around that and monitor it as you go forward and try to embed that in your culture. Okay, so I've talked a lot about culture and how that manifests itself in being an effective risk management function. But I want to talk about now, and sort of bring that to life, is this emerging risk of online fraud. This is basically a situation where somehow, some way, a fraudster manages to get inside the front door of your company by being either invited or sneaking in. So ultimately, you have to think about data security or data as the responsibility of every employee. You know, I don't have my cell phone on me, but that big one that Jeff Fettig showed earlier was not one that you could access the corporate intranet in, right? How many people carry around a mobile device that you can access your corporate internet on? Raise your hand. Okay, so like half the room. One mistake. You know, you answer one email from the posed prince and hit the attachment, and your whole firm can be in trouble. So I'm going to talk a little bit about best practices, but in the course of doing that, you realize that everybody who has to respond to these best practices is also potentially a source of risk. And so if it's just not part of your culture, ultimately you're going to have some trouble. So I'm going to talk about four main areas of prevention with respect to online fraud. The first is with systems. And when we think about systems, the basic one is you should make sure that your information security or your your antivirus software is always up to date. That's kind of basic on your work PC. That's always going to be updated. But what about your personal PC? What about your personal device? Those have important information updates too. And so you shouldn't do what, say, my wife does and have 50 software updates sitting in queue. You have to keep those things updated all the time. In addition, you have to make sure that when you are connecting, especially over or connecting to an important part of your firm's network, that you're doing so with a secure connection. So if you look in the URL bar, you see HTTPS. That usually means you're in a secure environment, and that's where you want to stay. In addition, you want to make sure that you're accessing over a secure network. So that's defined as something other than the Wi-Fi at McDonald's or the Wi-Fi in an internet cafe. Those are all things that are not a good idea to do, say, some online banking on. So let's talk also about online. So one of the things you want to do to prevent somebody getting through that fire or getting through to your system is by sitting behind a firewall, a VPN, or some other form of protection between the security, or excuse me, the network and you. And in addition, you want to pay attention to those websites that you use to process really important information for your company. And in particular, you want to pay attention to the look and feel of those websites. Really sophisticated fraudsters will be able to mimic the look and feel of some of the sites that you get on and then rip the data out of there as you're on it. So if it doesn't look quite right, get out of it, report it, and move on from there. The last one, this is sort of basic, are passwords. Keep your passwords secure and also make sure your passwords are robust. 1234, not a good password. A lot of people, I think I read on Wikipedia that that's the world's most popular or most common password, 1234. So probably not a good one. Another place, and we see this a lot, frankly, is a situation where email is used in order to infiltrate somebody's system. And that's by using a suspicious email, so sending you an email that looks like it's coming from an individual and a trusted individual, and it turns out to not be, or hitting an attachment, opening an attachment that causes and opens a virus. One of the best examples I can give you is a situation where a company or somebody inside your company will receive an email that looks like it's from a senior person at your firm. But upon closer inspection, the email address isn't quite right. It might be off by a character, let's say. And more than likely, that email will be asking that person to do something that's just not quite right. Like, say, allegedly an email that comes from the CEO of the company asking a controller to transfer 500,000 euros into the offshore account in Hong Kong and not mention it because it's for a top secret acquisition. That might have happened. Gratefully, the person in question in this case did not follow the alleged CEO's instructions to not tell anyone, escalated it, stopped it in its tracks. But there are other companies that haven't been so lucky. And then lastly, not doing my job if I don't talk about the online payment environment. And it's important, sort of rule number one in an online payment environment is to make sure that you've got proper segregation of duties, that basically people who can initiate some sort of a transaction also don't approve the same one. And that if you're going to accept payments, especially credit card payments, you do so in an encrypted environment. You hear a lot about this, obviously, in the press these days. Encryption helps. It's not perfect, but it helps. And then whenever possible, take paper processes and put them into an electronic format. It's very, very easy to be defrauded in a paper environment. Okay, so those something tangible that I wanted to leave you with in terms of best practices there. These are sort of industry accepted best practices. But if you think about it, everybody who has a PC, everybody who can access your company's network is a potential source of risk in this environment. And then ultimately, the only way to keep your company safe is to embed risk management in your culture. Let me advance this next slide here. I'm so used to having a clicker at home that's a little bit quicker. So risk management is everyone's job. Ultimately, you get risks of all kinds incurred every day at the frontline level, and there's no way to create enough rules or processes to avoid or anticipate every type of risk and move at the speed of, say, a whirlpool. We know that we've got to move quicker, and we've got to move more quickly with even better quality than we ever have before, and that means that the entire environment has to respond to that. So what are some of the traits of a strong risk culture? The first one is that everybody acknowledges that to some way, shape, or form, you're in the risk business. You can't succeed, you can't grow without taking some risk, but you have to be transparent and conscious about the types of risks that you want to take. whether that be the financial risk you want to take, the kinds of customers that you're going to serve, et cetera. And then once you all agree on the process, that everybody respects it. Ultimately, some words that I think are useful are identify risk, escalate concerns, and then debate it. So that as you move forward, you're able to go forward and grow successfully. Hopefully you're taking far more steps forward than you are back, and that ultimately you're able to grow and succeed and help make us a top 10 state. So I appreciate you spending some time with us. I've had a few days to prepare for this. I'm kind of a late ad, and I want to say thank you to the professional service firm members of BLM who all flooded me with some risk management thought leadership information that was very helpful in preparing for today. Hopefully you found it useful, and thank you very much.